Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at volatility. We're going to take a look at the Qqq, the technology sector. We're going to take a look at the Dow, and we're going to look at the S&P 500, and then the different trading vehicles. Okay, so first up we're looking at the futures here. As you can see, they are down. Dow's down another 89 points after being down into the close today. S&P 500's down. So it's looking like a possible lower close or lower open tomorrow. Nasdaq's down after a big down day today. Same thing with the Russell 2000, and then you have the VIX over here moving higher, trying to follow through after today's bounce following 5 red candles in a row. Okay, so what's going on? It came out a couple of hours ago that Trump's going to slap on 10% tariffs. So it was downgraded from the 25%, but it is going to be on 200 billion in Chinese goods. They did take some stuff off, like the Apple Watch and the Fit Watch and certain things to try to ease the blow. But the last tariffs that have gone through, each time the market has been down big on that day, and so it looks like history is going to repeat. And we're going to be down again. You never know. It could be down and then rally. Who knows how the market's going to react right now? It's looking like it's going to be under pressure. If you look at the volatility index VIX here, it was up 13% today. This was your clue. Okay, this was your big red flag that something was going on. VIX was really moving and cooking today, even when the market was up or slightly down. And so that was your red flag that something was brewing. And we knew it was brewing because the talk all weekend was about these tariffs. And anytime there's been a tariff, the market has been down the following day. The tariff news has always, it usually has been coming out after hours, and then the following day the market opens under pressure. Okay, because so we're looking here now at VIX with the close today above key moving averages, and that key is that 100 and 300 day simple moving averages at 1345. What you're looking for now, if that 1345 level holds, is a run back up to this 1475 to $15 level. That's been the big resistance zone. That's the 200-day simple moving average. That's the red line, and it's also lining up with this descending resistance. And so a break above this, if it starts trading at 15 and closes above, that would put a potential run back up to $18. If it comes up and stalls out at 15, that's going to be the temporary top level. That was the top in August and the beginning of September. So it's going to have to break above that level and turn it into support to head higher. If you look at VIX on the 15-minute chart, you could see here that it was that break above that 50 simple moving average at the open today. That was the big clue that it was heating up. We did put out alerts in the chat about this, that it was to keep an eye on it because it was signaling that something was brewing with that move above the 50, and then it got above the 100, and then in the close, the big thing is it closed above the red and the blue lines. That's the 200 and 300 simple moving averages, and so if it could stay above those levels and hold above 1350, that would be really bullish. It's also trying to break this resistance from back here on the 12th, the high close resistance level. If it can get through those levels, look for this 1410, 1420 level is a big level to break on the way back up to $15. Okay, if we look here at VXX, all right, this is up 3% today, and so you can see, look how it came up above 20 on Sdow. This had been down multiple days in a row, and so you can see after the black candle, which signaled the lock-in gains here at the 50-day simple moving average after a multi-day run. You had 5 red candles in a row, and these 5 red candles had 3 gap downs in a row, and that formed a bullish 3 gap downs reversal pattern. And today, okay, so here's the reversal pattern, bullish 3 gap downs, and you can see 1, 2, 3, and that's exactly what happened here, 1, 2, 3. When you get the 3 gap downs, it signals it's getting overdone to the downside. And also notice how the close was below that lower Bollinger Band. That's the purple line. That signals it was getting overdone, and it was setting up for a potential bounce. You could see last time it got below that lower Bollinger Band, that's where it bounced from. And so anyways, it's hitting EMA 4 at 28.21. That's the big level to break. If it can close above that 28.21 level tomorrow, that's going to be a signal that it wants to head higher. And then you're looking at the middle Bollinger Band at 29.10. That's going to be the next really big level to break. If it can turn into support, then you're looking for a run back up to that 50-day simple moving average. The 50-day simple moving average, basically at the 30 resistance zone, that is going to be the lock-in gain zone. until the trend changes. If it can close above that level, that's going to be a bullish change in trend and would signal to keep riding. If it hits that level and stalls out, it'll once again be the level to lock in gains. If you look here at VIX, this is the post from this morning at 9:15. It alerted our chat members that it was setting up. If you look here at the chart, you can see it was down here below the green line, the 50 simple moving average, and so it was the break above that was the big signal that it headed higher. You could see that, explained about the tariffs, and so this is the kind of analysis that I put out on a daily basis all through the day, trying to get people, I try to find setups and I use the charts and follow the patterns, and then I share that information with our members. So please come check out the chat. When you come into the chat, into welcome, please send me a private message to Osprey Eye to let me know that you have arrived. I'd really appreciate that. Thank you. Okay, so if you look down here above that 50 simple moving average, that break today, that signaled more upside potential. That was the big move. And so when it got above that level at 1 o'clock, that signaled that it was wanting to, that it was in play. Now it tried to hold that line, and it did, and then it stayed above, and that was a signal. Okay, yeah, this is the entry point. And so now that it's above these levels, it needs to stay above. If it were to drop below that 50 and middle Bollinger Band, that would be a sell signal. Also, now that it's above that 100 simple moving average at 27.98, it will signal downside risk if it drops below that level as well. That would be your early clue that the run's breaking down. The uptrend would still be intact if that middle Bollinger Band at 50 simple moving average are holding, but now that it's above that 100-day simple or 100 simple moving average in the 15-minute chart, you want to see it stay above that level. If it were to drop below, that would be a sign of weakness. Now it's working on filling this gap. There's a gap between the low of day over here, which is the bottom, the low, and the high here, which is actually more right here. The high right here would be the bottom of the gap level, and so a move up here to 28.60 would fill the gap. Okay, so now that volatility is running, Tvix and Uvxy are running as well. So this is the 2x VIX short-term ETN, and you can see here it's heating up after that big pullback. It had formed that 3 gap downs as well. You can see there is an unfilled gap here. A run up here to EMA 8 at 30.42 would fill a gap. So keep that in mind on all these volatility plays. When they fill that upward gap, many times that is a climax event and people could take profits. Just keep that in mind. A lot of times these ETNs and ETFs trade a little differently on gaps. The big thing on this chart is going to be EMA 4 here at 29.49. If it can close above that level, that's going to signal upside potential. Look for a run back to that middle Bollinger Band, break that middle Bollinger Band. We're looking for a run up to that 100 or 50-day simple moving average. That's where it ran to back in August. This did confirm the bullish 3 gap downs reversal pattern. Check out AmericanBulls.com if you like technical analysis, if you like to use Japanese candlestick patterns. It's a good tool to use to confirm your own analysis, or if you're learning, it's a good tool to use to learn the patterns in real time. And so, yeah, look at Uvxy here. This is the VIX short-term futures ETF, and so this is 2x VIX. And so this is a cool one if you're feeling confident about the trade. If VIX is up 2.9%, okay, this should be up, twice that. It wasn't quite twice that, but it's up 4.3%. You're getting bigger gains with Uvxy, but that can also work against you if you don't get the direction right. So keep that in mind. Okay, so I'm showing you a little bit longer chart. So all these have a chart that looks more like this. I was giving you a closer snapshot on the previous couple there, but this is the 6-month chart. You can see it's been in a long downtrend, and it's down here at the bottom of the chart, and so it's got a lot of room here to move back up to that 50-day simple moving average at 89.49. It needs to get above $8. If it can close above 8, that's going to be your clue it's heating up, similar to the moves back here. See, notice how it was the break above each time that led to the run up. It was the close above the pink line, right? And so that's what we're looking for. We just try to, and that's what happened here as well. And so, because we just look for the patterns, we could really even care less about the ticker symbol. It's just all about, finding the right setups and then repeating history, and then that's cha-ching. And so the markets, the patterns repeat, the ticker symbols never change. This formed bullish 3 gap ups, and that pattern was confirmed. If you look at Uvxy calls today, they did deliver nice gains. Notice how the calls. I mean, you know, they don't kill it like you know, you could get with some of the technology stocks where you're up, you know, 1,000% on a 4% move in the equity, but still, you know, 4% move in the equity is returning, you know, 60-70% gains, 40% gains pretty easy on the call options. That's more bang for your buck. That's why people trade the options. Okay, so let's look at Tqqq here. This is the technology sector. It did close down 1.4% today. Notice how it dropped below 50 on RSI and below 20 on Sdow. That's a big signal the chart's going down. If that's not enough, look at the bearish crossover on 80X. I mean, this is 3 major red flags right here, 3 in a row. And so also another major red flag today was that drop below the middle Bollinger Band. That level needed to hold at 183. Dropping below 183 signals downside risk. Keep that in mind. That's the big level. Write that down. 183. It has to be trading above for this uptrend to be intact. Now, it's hitting the key support level right now. That's this 50-day simple moving average. That's always the green line on my charts. I keep all the moving averages the same, so if you watch my videos over and over, you can see, you will be able to easily identify, oh, that's the green line, that's the 50 simple moving average on whatever time frame we're looking at. And so it makes it, you know, this is a big moving average for our charting theories, and so this is a must-hold level for the bulls. If it does break, that's going to be a major downside risk. That signals the bears are now winning. That signals that this uptrend that was intact for you know, multiple months here is breaking, and that a new downtrend could be beginning. And so you know, not saying that it's going to break. I'm just saying this is what we have to watch out for, because the downside risk is, if it does break, is a drop all the way down here to this 100-day simple moving average at 175. And so yeah, that lines up with the July support zone. And so it seems like that's a pretty logical target here for this, you know, to break below the 50. Now that we have, where we got futures over here, you know, we have the NASDAQ down right now, 33. You know, if it breaks this key support level, you know, that is going to put it down here below that 181 level. You know, 180, just write that down. It's got to hold that level tomorrow, trading below, and you could see a 175 test eventually. Okay, let's look at Tqqq. So, like, how do you trade when Tqqq is, you know, you could trade calls and puts on you know, for Tqqq as well, and then you could also get more bang for your buck if you go with the Tqqq here. This is the Ultra Pro, and it was down 4.2% today. It was definitely has the same kind of setup, below 50, below 20, bearish crossover, and so for Tqqq, the play today was puts, and so buying puts on a drop, you know, can return some nice percentage gains. And you can see here it did close just below that 50-day simple moving average at 66.26. And so if that level turns into resistance, then you're looking at a potential drop down to 61.40. Now the saving grace could possibly be that lower Bollinger Band at 63.59. It could bounce off of that level before hitting here, similar to how it did over here. It hit that purple line and bounced. But as you can see, the green line has been acting as support. And so once it breaks, that's a bearish change in trend. Okay, so it really needs to hold. If you draw a trend line across these tops here, you can see it's got a downtrend going here. You know, it's making lower highs, and so yeah, if we yeah, it looks like, you know, this is lined up, you know, to come down here and test support. Okay, so if you look here at Tqqq put options, look how well they returned today. I mean, 300% gain, you know, 283% gain, 160% gain. You know, the September 21st expirations did really well today, so congrats all you options trader. 4% move in the equity, down move, created a 300% gain on the September 21st 63 strike put for Tqqq. So that's pretty cool. Yeah, so let's look at Sqqq here. It closed up 4% today. Now this is the short technology sector. So if you want to go, if you think the technology sector is dropping, then Sqqq is a way to go long without having to take a short position. This goes up when the technology sector goes down, and so yeah, and you can trade the equity on these as well. We're just you know, focused on the options, but you can, a nice 4% gain is a nice gain. If it just all depends on your risk tolerance. So right now, what's going on with the Sqqq is it's trying to get an uptrend going. Notice how it has this pattern where it keeps hitting, closes above the middle Bollinger Band and it hits the green line. This is hitting resistance. It's hitting the 50-day simple moving average. If it can close above 1222 tomorrow, that's going to be your signal that it's ready to head higher. And then what we're looking for is a break above that upper Bollinger Band at 1258, and that could lead to a run to that 100-day simple moving average at 1255. Okay, so for Sqqq, the play is call options. So call options deliver nice percentage gains today. Many times, you'll get better percentage gains buying puts at a top than you will calls at a bottom. But Sqqq calls did great today, so congrats all the traders. You can see here that the middle Bollinger Band at 1177 is the key level to hold. That's the stop loss level. If it were to drop below that level, that would be a sell signal. Okay, let's look at Dow Jones Industrial Average here. Okay, it closed down 92 points. It's down another 93 right now, so it's pulling back. I mean, nowadays, 93 points isn't that big of a move. I mean, it's only 0.3%, but it's still a red flag. The Dow Jones has a very strong uptrend going. Okay, so it's been super strong. It's been pushing really hard. It's getting a little frothy up here. Okay, but the markets have been defying the odds, and they keep pushing higher. Now the question is, will the Trump 200 million in tariffs, is this going to be the nail in the coffin? I mean, this is looking like a double top to me. The top came back up, tested that top again. So we have a double top setup, potentially, and then we have this low close here that must hold, and so this is the tight channel that it's been in the last couple weeks. And so you can see here this channel. So it's been bouncing off of support, hitting resistance. Now we've got the double top. And so now it's set up to come back and test the middle Bollinger Band. And so the middle Bollinger Band is going to be the big level to hold. It's currently at 25949. So just to make it easy, 25950. If you see it trading below 25950 tomorrow, okay, so that's going to be, right now it's at 2609. So 25950, that's going to be a major red flag. That's going to signal downside risk. That's going to break this pattern. And the reason why is because stocks like indexes, cryptocurrencies, commodities, I don't care what you're charting, if you throw it on a Japanese candlestick chart and you use the theories that we trade with, when it breaks below that middle Bollinger Band, they head to the 50-day simple moving average. That's the next moving average below for stocks that are in an uptrend or indexes that are in an uptrend. And for the Dow Jones Industrial Average, it's in an uptrend, and the middle Bollinger Band is the 20-day simple moving average. If it were to drop below, the downside risk is it comes down here to that 50-day simple moving average at 25,530, and so it just keeps on. That 25,500 level is a big level, and that's going to be a huge level to hold if it gets tested on a pullback. Okay, so let's look at Udow here. So how do you trade the Dow Jones Industrial Average? One way is Udow. Okay, so on a pullback, Udow puts have been delivering nice percentage gains here, and so they did well today. You can see it has the same pattern as the Dow Jones Industrial Average. You have your double top here, and you have a tight channel, a trading range that it's been in the last couple of weeks, and that's led up to this pullback now. And then you have what looks like a potential gap down open tomorrow. And so if it breaks below that middle Bollinger Band at 103.37, it's all about holding 102. That's been support here. If it breaks below 102, then that's where you could see a drop down to 98.50 to test that 50-day simple moving average, just like it did on August the 15th. To head higher, it's going to have to break above 106. Trading above 106 signals upside potential. Okay, you know that it's breaking down if you see Udow trading below 103.37 tomorrow. Okay, another way to play a pullback for the Dow Jones Industrial Average is to trade Sdow. Okay, Sdow is short Dow 30. Notice how it's heating up. It crossed above the 20 on fast Sdow. Okay, it's in a very strong downtrend. I mean, it's a super ugly chart. Right? It's hard to get excited about this chart, but but it's something you have to watch here, because if the Dow pulls back, this is going to head higher. Notice how it has the double bottom type of vibe going on down here. You've got a bottom and then another bottom, and so has a double bottom. Okay, double bottom at a double top signals potential pullback. A double bottom signals potential bounce. Okay, it did close above EMA 4 at 15. 15 is the stop loss level for this ETF. You don't want to be long if it's trading below 15. That would be a red flag. Holding anything overnight that closes below EMA 4 on the daily chart is a risk to hold. It's all about breaking the middle Bollinger Band at 1522. If it can close above that level, that's where it could get a new uptrend going. Okay, last time it got above the middle Bollinger Band back in August, it did run to that 50-day simple moving average. So that would put that $16 level as the target if it can turn 1522 into support. Okay, let's look at the S&P 500, SPX here. So yeah, it's pulling back as well. You can see Sdow got below 50. It's starting a bearish crossover on ADX. Notice how the red line's starting to cross the green line. When minus DI crosses plus DI to the upside, it's a bearish crossover. It's a signal the bears are taking control. It's hitting the middle Bollinger Band right now at 2885.50. It needs to hold that level. If that level were to break, it could drop down here to that 50-day simple moving average at 2846. That is the downside risk. Okay, so it needs to hold this middle Bollinger Band. You know, that level's been holding during this uptrend. Okay, it will be a bearish change in trend if it breaks, similar to back here in June when it broke and it came down here and it tested the lower moving averages. Back then the moving averages were a little closer, but it would come down here and test this 2850 support level if that 2885 level fails to hold tomorrow. Okay, so how do you trade the S&P 500? One way is Spxl. If it's dropping and pulling back, put options will be rising. You know, they did well today on that 1.6% drop. It has the same chart setup. It needs to hold that middle Bollinger Band. Currently at basically at $53, that 52.91 level. You know, trading below 52.90 is going to be a red flag, and you could see it drop down to that 50-day simple moving average at 50.86. Notice how the dotted purple line's been holding. All right, when it breaks, it comes down to that 50-day simple moving average. You know, it broke over here, 50-day simple moving average. That is the target if support breaks. Okay, if you look here, SPXs, this is the S&P 500 bear 3 times, and so these are 3 times the move of the S&P 500. At least they're supposed to be. You could see S&P 500 was down half a percent here, and so the bear ETF was up over 3 times that. And so, you know, so that this will go up 3 times the move of a downward move for the S&P 500. The inverse of that is if the S&P 500 goes up, this will go down. And so, yeah, you can see the crossover starting on ADX here. It's pinched. You can see the Sdow is getting above 50. It's trying to break that middle Bollinger Band that's currently at $22. Okay, so trading above $22 tomorrow is going to be bullish, and look for a run up to that 50-day simple moving average at 23. That's going to be the target on a break above 22. It's going to need to stay above that level. If it fails to break that level, then that'll be a red flag, and if it drops below the EMA 4 at 2187, that will be a sell signal. It has to break 22 to be a good play from here. Okay, so yeah, let's look at SPY. Okay, so this is the Spider S&P 500 ETF. Same deal. You know, you've got the double top look up here. It didn't quite get to this other top. Well, here, let's put in the bottom of this channel. Yeah, so it's pulling back as well and testing the middle Bollinger Band, and if it fails to hold that level, then you could see a potential pullback down to the top of this channel. You notice there was a gap here. It came down and filled the gap, and then it bounced back up, and then it stalled out at the 291 level, and then now it's pulled back and it's testing that middle Bollinger Band at 288.76. And so if that level breaks, you're looking at a drop down here to 287. That's where the where the support level was, the bottom of this gap. And so if it were to break below 287, that's going to be your, or maybe that's 286. Yeah, between right around 287. Yes, and it drops below that level, then you're looking at a drop down to the 50-day simple moving average at 284.56. that would be the downside risk on this chart. It's all about holding the middle Bollinger Band and keeping the uptrend going for these indexes and for the stocks that I showed you and the ETFs and ETNs. If that level breaks, then new downtrends could begin. Okay, yeah, and then just real quick, take a look at Bitcoin here. So yeah, Bitcoin has been under pressure. It came down here and bounced, and it was trying to get above the EMA. It did get above the EMA's 4 and 8, but notice how it has the bear flag kind of look here. And then what happened was it stalled out again at EMA 13. They've had the algorithmic trading program set for selling at EMA 13 for most of these altcoins and for Bitcoin. That's currently at 6446. So if you're a Bitcoin trader, you know, use EMA 13 on your chart. These moving averages, I have them on here because they work. And so, yeah, if it stalls out at that level and you're playing the bounce, you know that's where you need to lock in gains. For people that are looking to try to jump in this and ride, it's not going to get extended run until it gets above EMA 13 and turns that level into support, similar to the way it did back here on August the 18th. It held, it made a nice run, it got below here on September the 5th, and that's where it made the big drop lower. Okay, and so yeah, or what is this? September this was August the 23rd. August the 23rd is when it got that run going, and then yeah, so yeah, there you go. Little look at Bitcoin here. All the altcoins and everything are under big pressure. You can see down here. Yeah, I'll try to get a new video out for them if I can get some time. All right, thanks for viewing this video. I really appreciate it. Come check out the chat. Thanks.